PP case, and this information is relevant for questions 47 to 51. All right, so here they are asking what is the amount of revaluation surplus? Revaluation surplus. Okay, that will be recognized in respect of the building. Okay, for building. This is the ask. So why there will be any revaluation surplus and all? Let's read it. The draft financial statements of PP come for the year 31st December 19, okay, are being prepared, and the accountant has requested your advice on dealing with the following issues. PP has an administration building which it no longer needs. Okay, so they were using some building for administration, now they don't need it. So on 1st July 19, PP entered into an agreement to lease the building out to another company. So on this date, they are leasing out the building to another company. The building cost 600,000. So on 1st January 2010, 9 years back, nine and a, 8.5 years back, or 9.5 years back, on 1st January 10, the cost was 600,000. Okay, let me change the number format to make it what to make it financial. We don't need the decimals. Okay, so 600,000 was the cost. Its life is 50 years. Hmm? Life in years 50. Based on the IAS 16 property, plant and equipment cost model. Okay, PP applies the fair value model under IAS 40 investment property, and the fair value of the building were assessed at 800,000 on 1st July 19. So on this date, when they decided to lease out the building, on this date, uh, um, the fair value of the building is 800,000. Okay, this valuation had not changed on this date. On 31st December 19, also on this date, also the fair value remains 800,000. I think this is the fact that we require to answer question number 47, where they are asking what is the amount of the revaluation surplus that will be recognized in respect of building. Revaluation surplus we need to calculate. So on 31st July 19, they leased out. 1st July 19, they leased out the building, and the you know fair value of the building was 800,000. So one number we already have. Now we need to see on this date what was the carrying amount of the building. Okay, I mean on 1st July 19, what was the carrying amount, and then we will compare this carrying amount with the fair value on this date. Okay, so how can we calculate this carrying amount? So 600,000 divided by 50. So if we say that what was the yearly depreciation? Yearly depreciation. Yearly depreciation will be how much? 600 divided by 50. So every month, every year they are depreciating it with 12,000. So for the year 10 to 18, these are 9 years, nine and a half, 6 months. So So this is yearly. We can multiply it by 9.5 years. 114,000 will be the total depreciation, right? We divided 600,000 by 50 and multiplied by 9.5, because from 1st January 10 to 31st July 19 it is 9.5 years. So then the how much will be the carrying amount then on this date? We had 600,000 of cost. We have depreciated for 114. So our carrying amount is 486, and the fair value on this date is how much? 800,000. So how much will be our revaluation surplus? 800,000, which is the fair value on the date this building is transferred uh, as an investment property, and we will deduct this carrying amount. So 314, which is the balancing figure here, it will go as a revaluation surplus. So our answer will be 314 for this one. Okay, 314,000. Okay. Question number 48. In respect of the building in 2 that we just discussed, how will the increase in value from 550 to 740? Okay, looks like there is some other facts here. Yeah, pointed to. PP owns another building which has been leased out for a number of years. Okay, so there is a leased out building for long, for too many years. Last year end, 31st December 18, its fair value was 550,000. Now, on this reporting date, 31st December 19, the fair value had changed to 740,000. So, there is an increase in the fair value of some property which is leased. That means it is an investment property. Hmm? IS 40 will apply. So, if there is a change, this goes to the profit and loss. So, first will be the answer. This change in fair value, it will be credited to profit and loss. Hmm? Increase in the value, it will be credited to profit and loss. So the answer for 48 will be credited to profit and loss. Okay. 49. Using the pull down list provided, select the amount at which an impaired asset is measured when an impairment has taken place. When an impairment has taken place, impaired asset is measured at what? It is measured at recoverable amount. As per IS 40, when an impairment takes place, impaired asset is measured at recoverable amount. All right. Question number 50. No maths here. Be easier. Which two of the following statements regarding the reversal of impairment losses are correct? Impairment losses. So they are asking which two of the statements are correct. The reversal of goodwill impairment should be recognized in OCI. So, impairment losses in respect of goodwill cannot be subsequently reversed. So, first one is not a good option. It's incorrect. The reversal of impairment losses on revalued assets. Hmm? So, here they are saying in the second prompt. In the second one, they are saying reversal of, actually all these four options are talking about um, reversal of impairment losses. Okay, it is all talking about reversal of impairment losses. So the reversal of goodwill impairment. So first option, what it is saying that this reversal on goodwill, hmm, should be recognized in OCI. So this is incorrect. Okay, because no reversal of impairment loss on goodwill. Okay, so this is incorrect. This will not be the answer. Second one saying reversal of impairment losses on revalued assets. Okay, revalued assets. That makes sense. Revalued assets should be recognized in OCI. That's a simple, straightforward thing. It is correct. Okay. Revalued assets like buildings and other. Um, if any asset is revalued, that goes to OCI. That is correct. Third one. An impairment losses can only be reversed if there is a change in the estimates used to determine the recoverable. If there is a change in estimates, that's right. I mean, if there is a change in estimates, determine that was used to determine the recoverable amount, you know. So this is also correct. Okay. Fourth one. Only impaired losses on non-current assets only. Non-current is not like that. Non-current assets only can be reversed only. No, that is also incorrect. It is not that only non-current assets we will take. You know, IAS 36 does not apply to inventories, but they are, you know, any other non-current assets. It does not scope out. I mean, it doesn't talk about other current assets. You know, it doesn't scope out that thing. So it is nothing like that. So revalued asset on reversal of impairment assets on revalued assets goes to OCI. That is correct. And impairment loss can only be reversed if there is a change in the estimates, you know, used to determine the recoverable amount. So only then it is reversal. So we need to understand that everything that they are talking about here is about reversal. Reversal is the keyword here, like reversal of impairment losses. So we know that it is talking about impairment losses. We need to focus on the reversal when it happens, when it does not. Hmm. Like on goodwill, we can't. If there is an impairment, it cannot be reversed, and it is not like that. It is only for non-current assets. Hmm. And revalued on the revalued asset, it goes to the OCI, and reversal is only possible, only be only possible if there is a change in the estimates. Hmm, that was used to determine the recoverable amount of the impaired assets. Okay, the last one, 51. What will be the amount credited to P&L? Amount credited to P&L in respect of the reversal of the impairment loss. Okay, so looks like in the facts there is some reversal of impairment loss. Yeah, 31st December 19. So let's look at that. What are what they have given about this? So, okay, the third pointer here, it is saying PP owns a retail business which is considered a separate cash generating unit. Okay, they have a retail business also, which is a separate cash generating unit, which suffered a difficult trading period in the previous year and was subject to an impairment review at 31st December 18. Okay. The question is asking about amount credited to P&L reversal of impairment loss at 31st December 19. Okay. So December 19 we need to tell. But in this fact they are telling that this company has an impairment on 31st December 18. So on 31st December 18 they had an impairment loss of 100. 60,000. Noted. The directors of PEP believe the indicators of impairment have reversed. Okay, okay. So now they are saying that, you know, on this date there is reversal of impairment. All right, noted. And wish to reverse the previous impairment loss to the maximum extent possible. To what extent we can reverse. So let's enter everything that they have given here. Okay. So they have given asset, building, plants and equipment, and goodwill. So there is this, carrying amount. I will write carrying value at, you know, like carrying value at December 18. Okay. So they had 900, 300, and 40. So assets is actually everything is assets here. So this thing 900, 300, and 40. This is before impairment. Okay. Then they had, you know, impairment loss of 100, 20, and 40. So they have this estimated value, hmm, on which date estimate. This is the same thing. This is December 18. They had this impairment, and now the estimated this thing is December 19. On the reporting date it became 925. It is 310, and it is 60. And then we have, like, on this date only, the carrying value, I will say, for to make it just shorter, nothing else. So the carrying amount would be no impairment. If there was no impairment, the carrying amount would have been 875, 290, and 40. An impairment review has been carried out on 31st December 19. So on this date, they have carried out this thing, and they're saying that the cash generating units recoverable amount is 1.3 million. That is also an important factor here. Recoverable amount. Why recoverable amount is an important factor here? We are saying 1.3 million. We just did an MCQ, no? This 149, that when an impairment has taken place, impaired asset is measured at recoverable amount. So that they have given that the recoverable amount is 1.3 million. Okay. So we discussed in one of the objectives that impairment losses on goodwill cannot be reversed. This one that we discussed here in question number 50. That if there was a reversal of goodwill, if there was an impairment of goodwill, that cannot be subsequently reversed. Okay. So we can only reverse on building and plant, right? So, and how much we can reverse? Up to the maximum of what the asset would have been carried had no impairment occurred. So going back to this table, how much we can reverse? Here maybe we can say reversal. So you see, like, we had 100 of reversal, so we can reverse up to 100, but then we can't reduce it, you know below 875. Okay. So 900, I mean 875 we have to keep. So before impairment it was 900. How much can we reverse here? We can bring it down to 875 only. Okay. So from this 900 to 875, I mean this 900, we have to, sorry, is 925. This if impairment had not occurred, the values are 870. This is 290. Sorry, that was confusing. 290 and 14. This was a typing error. So how much they can reverse here? Okay, 925 minus 875 was the carrying amount after impairment is how much that we need to take, and carrying amount had no impairment occurred. So here not we don't need to take this estimated value, although it is given in the question. We need to take after impairment. Sorry, after impairment, how much is the value there? Okay, and this will be like 18 only. So after impairment, we need to take this 800. This is this. This is this. Goodwill has no value, and this is 800. This is 280, and this. So how much we can reverse is to the maximum of 875. Currently it is 800. 100 we have to reverse, but we can only go till 875. So only 75 we can reverse here. In this case also, we can reverse only 10. Although we had original impairment of 20, after impairment the value is 280. If there was no impairment, this would have been 290, okay, on this date. But so we can just keep it till 290 only, so only 10 will be allowed. But would have been minus after impairment, and on goodwill we can't reverse as we discussed. So the total impairment we can have is of 85 only. 85,000. So all these numbers are in thousands, and we need to answer in dollars. So what we will do, we'll multiply it by 1,000. So 85,000 will be this thing, and yeah, and this recoverable amount, I said it is important, but it is important when we are recording the impairment. Here, what is happening? We are reversing the impairment. Okay, so hang on for a few seconds and think about this. That we can't reverse goodwill, and then we can reverse other assets to the extent of the carrying amount that it would have been had no impairment taken place. If there was no impairment, our value would be this much. So we can't go below this. Okay. So this column is important, and this is important, right? So we have 100, but we can go just this thing. So we just deducted of after impairment whatever the value we had. All right. So I think we have done all of this 49, 51. So the answer here is 85,000. The last one, 51. Fourth one will be the answer. 85,000 that we discussed. Okay. 85,000. Yeah. All right.